Hello and welcome to my video, where we discuss important financial topics. Today, we're going to talk about the Federal Reserve, the central bank of the United States. The Federal Reserve plays a crucial role in regulating the economy, and it's important for investors and individuals to stay up to date with its policies and decisions. To help you out, we're going to discuss some important numbers to research and keep up with. The first number to keep an eye on is the federal funds rate. The federal funds rate is the interest rate at which banks lend to each other overnight. The Federal Reserve sets this rate, and it has a ripple effect on the rest of the economy. When the federal funds rate is lowered, it becomes cheaper for banks to borrow money, and they, in turn, lend more money to businesses and consumers. This increase in borrowing and lending stimulates the economy and encourages growth. Conversely, when the federal funds rate is raised, it becomes more expensive for banks to borrow money, and they, in turn, lend less money. This decrease in borrowing and lending slows down the economy and discourages growth. The next number to keep track of is the inflation rate. Inflation is the rate at which the general level of prices for goods and services is rising. The Federal Reserve tries to keep inflation at around 2% per year. When inflation is too high, the purchasing power of the dollar decreases, and people are less likely to spend money. When inflation is too low, the economy may stagnate, and businesses may not invest as much. The third number to watch is the unemployment rate. The unemployment rate is the percentage of people in the labor force who are unemployed but actively seeking employment. The Federal Reserve uses the unemployment rate to determine how well the economy is doing. When the unemployment rate is high, it indicates that there are not enough jobs to go around, and the economy may be in a recession. When the unemployment rate is low, it indicates that the economy is doing well and that people are finding jobs. Lastly, it's important to keep track of the balance sheet of the Federal Reserve. The balance sheet is a financial statement that shows the assets, liabilities, and equity of an organization. The Federal Reserve's balance sheet includes assets such as Treasury securities and mortgage-backed securities, as well as liabilities such as currency in circulation and reserves held by banks. Changes in the balance sheet can indicate changes in the Federal Reserve's policies and can have an impact on the economy. In conclusion, it's crucial to keep track of these important numbers when it comes to the Federal Reserve. The federal funds rate, inflation rate, unemployment rate, and balance sheet all have a significant impact on the economy and can affect your investments and personal finances. Stay informed and stay ahead of the game. Thank you for watching, and we'll see you next time. Smash the like button and subscribe to the channel, please.